Meta exploded this week. Huge gap up on earnings. The earnings were good, but the real move was the buyback. Once they came out and said they were going to buy $40 billion of their stock, the pre and the post data in right here, you can see that little move. And we covered this after Snap. Make sure you subscribe to the channel and click all notifications. This is from January 31st, and you can see that after Snap's earning, we issued a video out that said why Snap made Meta buy. This channel is very different. We put out actual tips and we put out actionable ideas. Doesn't mean we're always going to be right, but we put out actionable ideas. We put them out in a manner, and it's very timely. There's no Monday morning quarterback here. So if that's of interest to you, you found your channel. You can see this Meta line and how we're sitting right there, right? We're just literally wedged right in there. Make sure you stay to the end too, because we're going to go through the indexes and what to expect next week on them. There are 10 solid names here I have. Look at that line, that 183.29. It's beautiful. We actually did a pre-market trade knowing right where our line was. Once we came down here, tested it, and then started to roll back up, it provided us an entry. If you zoom in here, you can see the little flim flam comes back down, retest, and then just explodes. So we did fairly good with this one off the open and just sold into the rip. This move is far from over. To join the community, simply click the link up here or the link in description and you will be added to the wait list. Your comments are why I go through certain trades, because you ask. So I do read all the comments. Now, once you started flipping and then you can see this 3-bar pattern right here, 1, 2, 3, gave you another one. And you can see this reversal pattern up here. It's not perfect, but never really want to stay in if you've got a long red bar down after you have this beautiful one up, right? You just don't want that. And then you saw the undercut right there. So you can see that that was pretty much your defining role for the day. Now, why are we still looking at this one? Because this is far from over. They have a very low PE. They came out and they said they were going to cut expenses by 10%. If you take a look at what's going on right here, look at that volume. You have not had volume like that in years. I mean, it has been years since you've had volume like that. That is not going away. That is not mom and pop. That is not just day traders. That is institutions putting money to work. That's what gave us confidence today in buying right on that support level. I'd strongly recommend you get very good at support and resistance levels right now. They're going to be very helpful coming up because we're going to be we'll get into it in the end, but we're going to be in somewhat of a range and you're going to have to learn how to actually trade those support and resistance and back tests and retests. Now look right here. Okay, the white line is our 55. Now what we're doing with the charts on here, we're using TradingView. Comment on that if this is cleaner. I think this is a lot cleaner for us to look at this way. I always look for this. Now, I'm not crazy about the slope of the line. We are above and we have not been above all year long. So this is the first time we closed on a weekly above the 55 in over a year. If we put an anchored V in from this recent peak, you can see we stopped right there. So now we know where we have issues. Just a real quick tip. I don't use anchored VWAP that often. When I do, it's more on a strategic level as a peak or a valley. I'd strongly recommend that you start looking at weekly charts and start looking at these levels. Some stocks are blowing through them. Some are hitting them like they're a brick wall. Apple, look what we're closing above. I mean, it's exactly what we want to see, right? 55 SMA on a weekly chart. This quarter we put out there on Twitter and we were talking about it. We actually were going over it on YouTube as well. This was not the worst quarter. Matter of fact, one of the things I kept saying was wait for them to finish the conference call before you do anything. The earnings in and of themselves were a disaster if you just read the headlines. Now, once Tim Cook started speaking, you can see you have this flag down here, and one of the patterns we always use in the Alpha Chasers community is we watch that first 15-minute bar. In this case, it's just a 10-minute bar. You can see that the next 5 minutes is in between 10 minutes right here, so you can see what type of time frame we're looking at. But so you're forming this bear flag coming across, right? And then you just stop, and it just keeps bonking over and over again, meaning it's unable to break. Bonk, 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 right? Finally flips. Why? Because he explains what happens. And once he explained what happened, people put money to work. I went and listened to the call a couple times. Bottom line is they had 800 basis points in gross margins that were evaporated because of their lack of hedging in currency risk. Now they also came out during this conference call and stated that China is firing at these type of capacity that they want. So do not sleep on this just because it lifted. If we look at the anchored VWAP, you can see exactly what I'm talking about on these and why you want to watch them. From the peaks, especially when you're coming out of a bear market. So you can see from that peak how we just wrestled with it. Even when we tried to flip it, we're unable to lift. And you can see that right in here, right? Bonk, bonk, bonk. And then the earnings got us through. This is not mom and pop putting money to work. Does that mean it's going to go straight up? No, it's not. No, I hope it doesn't. I hope it comes down so we can add more. Don't sleep on these companies, these large companies right now. One of the core things we talked about 2 weeks ago in January was the tax selling. And that's exactly what this was. If you come down on Tesla for 30 days, then about 2 weeks ago, we started talking about these dojis and we thought that it could have a move into earnings. Earnings were fairly decent. It was more the way that he talked about why they did the price cuts. I liked the conference call, I'm not going to lie. I thought it was fairly decent. What I really like is I like these little undercuts and I like these piercing patterns. This is exactly one that we went over in a previous video. And that's why I'm saying if this is of interest to you to understand these patterns, you found your channel. So what I'm talking about here is you're flipping, right? So you undercut right here. See how you undercut that bar right there? And we'll zoom in on this even more. So you undercut that bar right here. That shakes out all those people, and the people that wanted to short were waiting for that as their signal, and guess what happens to them? The flim flam, right? So then they get filled, and what do? They run it right back up. The moment that you flip this level, all the people whose hopes and dreams that it was going to roll right back down are smashed, right? So now they have to cover. Plus you have people that know this pattern and just step in and buy. Look what happened today. You have a doji. Dojis are signs of uncertainty. We're fully aware of that. We held the doji. Now, I would have loved to closed at the high end of this bar, but look where we closed. Another higher high. Even though it wasn't spectacular, maybe we're getting a little spoiled right now because you're closing at the high of 2023 today on Tesla. If we drill into a longer time frame, we can see right in here how we are flipping the 200 weekly. Look at the volume. I mean, that is insane volume that's coming in. You've not seen this kind of volume since 2020 in October. So don't rule this out. Does it mean it's going to go back right away? No. There are levels to it. Set your support and resistance, look for support, and look at buying those retests. At the end, we're going to walk through the indexes and why I'm suggesting not buying the breakouts. I'll explain it. It's relatively simple. Now, if we just drop an anchored V right there, you can see you're nowhere near it. You're nowhere near even a retest yet. You could get to 250 before you have a retest here. I think that's pretty significant, and I think that's very doable. If you use TradingView and you are very proficient at it, or you watched videos, please comment what videos you've watched. I've played with this and I've used it as a backup, but the more functionality I learn with it, the more I like it as far as like educating and teaching with. TrendSpider has some other things I really like as well, different functionality. I would like to learn more about it, and I'd like to get up to speed faster. So if you have some ideas on some videos I should watch to get up to speed about functionality, I understand I write the scripts, I can do that, but anything that could speed that up or creating my own indicators, anything like that, please comment below. It would be very helpful to me. So, and I appreciate it. Thank you. Here's Coin. Why is Coin here? Coin is telling us that despite all this volume on the weekly, that maybe that's it. I don't know that that's it just yet, but we are stopping right there. Okay? We just stopped dead. Now, why did we stop there? Put an anchor right on this doji peak after the IPO price. You can go back to the IPO price as well and put one there, and you can see your levels right in here, right? So you kind of an understanding of where you could get to, but we have earnings coming out. That is not the bar you want going into earnings. So you had a really nice push here. You had a beautiful pattern here. Beautiful. I did not do it. I was playing other names, but these double inside bars right there, with that being a doji, I mean, it should be in a textbook. It's so perfect. I'll zoom in on it so you can see it. And you do yourself a favor, look for these patterns, because if you can spot them and then you flip, you did right here, they're just golden. You have two inside bars. So in other words, you're fighting. It's getting tighter and tighter in here, right? This is the breakout, and the battle keeps you in that bar. Then the battle gets smaller. Look how small that body is. Boom, flips. That was it. That's all it needed. And then you just had the volume kick in. Now we have a gravestone doji sitting there. And if you break that gravestone, I'm actually looking at this for a short. So if I break that, I might be interested in the short and seeing if I can retest here. If I'm able to get the short off before earnings and get up and in it, and then maybe marry a call to the short position to hold through earnings. I don't know how it's going to have good earnings, but quite frankly, in this kind of market environment, it could be the rising tide. I do do want to go through that at the end of the video, so make sure you stay to the end. But I'm looking at this more as a short. Wicks are price rejection, and that's pretty glaring. We'll have to see how that plays out. So this is one of the names people were buying in the Alpha Chasers community, and I actually had somebody that reached out to me the other day around here, right around this level. So I started doing some work on it, and what I really found out there that I thought was fascinating was when you're seeing this move up, right in here, you don't realize how undervalued the company is. So this company is still trading at roughly 45 cents of book value. So to put this in perspective, here's book value. And you can see the 0.47 right here. You can see December 10th, you were trading at 33 cents of book value with your median being 1.8, right? Which is kind of insane. That's obviously when it went public for the first time, but an average of 2. So let's just take the 1.8. Let's just take the book value. Now, what's appealing about this is not only this cup, not only the volume that's coming in, but I have some time. I don't have earnings till March, and everybody is going to want to be involved in this because they're going to issue a dividend. And sometimes that dividend is extreme. There were cases where we were buying this and getting $7, $8 dividends. I think in one case, we actually pulled out something really significant. It was like $13 or $17. This one was $5. The majority of it goes right to the bottom line. They just kick it all out in the dividend, all their earnings. There's $2.50, $2. So you're getting $2 there. There's a special dividend, $17 we received on that one. So I like playing it, and I like playing it for the dividend. I think people are going to want that money, quite frankly. And if you can get up and in and you can hold it, then you can actually hedge it into earnings and make out pretty well. And I think you're going to see that, especially with how oversold this is. And you're seeing this cup, but we have this line right here. So we're going to have to watch this line very, very carefully. Now, this is a shipper, and it is a dry shipper, meaning they're not really in the oil services. They're not really shipping energy, and they're really coming out of Southeast Asia. They're one of the only shippers that actually has direct access from Asia to the Baltimore port, which is kind of fascinating. So they do have that issue, and China is reopening. So this is pretty significant for them. This is the Baltic Dry Index, and essentially think of this as how you price a 20-foot container that's going to travel. And you can see the numbers over here. Those numbers, they're not going to mean much to you. So just think about them as a correlation and look at them on a percentage basis. And you can see what happened since the peak, right, when everybody had to own everything, and then how it just all dropped down. And now you're at about 90%. Right, of a discount to where you're at. So you go back and look at this just historically, and you can see that when you get this level, well, over the past 10 years, you really have found a bottom. In other words, you really find a trough. Now, you do have periods like here where you spent 6 months below it, a couple months here and there battling it before it came back. But if you were going to buy a company that was in this business, maybe the time to buy it is when it's trading under book value, and they might have flushed out the bottom in the Baltic Dry Index. I mean, you'll remember the same kind of situation with Toll if you get the newsletter, link in description to get it. But you see how you're coming across right here, this 47? When we started buying it, it was trading at book value. Book value essentially is assets, liabilities, and if you liquidate it, what you would get per share for the company. So you're buying these companies under book value. It's kind of crazy. And what we're seeing with them is you're seeing opportunity. They might not run away from you, but that slow grind is fine. You know, we're up well over 20 in this trade right now and have lost very little sleep over it. For those of that have been around for a while, you remember when we bought this SRG right in here, right? Off that open, it was still trading at 50 cents of book value when they said they were going to start liquidating the portfolio. I still have a piece of this. It acts great. And I eventually think that they actually get taken out, but it doesn't really matter. The point being is if something's at book value and then there becomes a catalyst like you have with ZIM, and you have a catalyst now, right? And your catalyst is going to be that China is reopening, we're going into earnings, and the Baltic Dry Index is at a level that historically is a 10 or 12 year bottom. Some of these names you're going to recognize. We started buying this at 47 in the newsletter. See our level right here, that 48.90. We wanted to make sure that we got through that, and we did, and we pushed. It actually gave us another entry, and we did another technical pivot area right in here when it flipped back over after breaking down. That's pretty classic. And then you flipped the gap, obviously, from the meta pressure. And you saw that a lot of the online retails have pressure because of that. So I thought that was somewhat fascinating. But you can see coming across here, don't don't sleep on these because they're breaking out. What you want them to do is you want them to pull back, and you are going into earnings. Okay. You do have earnings coming up on the 15th, but you want them to pull back. You want to get involved with them. You don't have to get involved now, but start looking for these. We've been talking about them. These golden crosses, they're everywhere. Don't rule these out. Don't rule out this space. As I said earlier, I do read your comments and I do respond to all of them. It just takes me some time because it's a one-man show and I'm going to keep it that way. But this is Smith, and it's a tool that I use. I'm not affiliated with them at all. You'd have to just go on the internet and find it if you want to try it. But I think it costs me about $150 a month, something like that. What this does, this particular part of it is one of the features I love. You have 197 items up here, okay? These are all subset of sectors. And what you can do is you can sort by industry group and see who the top sector is. Right? And I think that's somewhat really important for you to drill into, because you can go here and say, okay, well, oil services is where I should be looking. Well, retail department stores are doing exceptionally well. And then you can see year-to-date change, right? Now, what's nice about this is you can sort by it. So I can click year-to-date change, and then I can just start going through them and go, well, they're buying the heck out of the auto manufacturers, right? And you want to kind of drill into them if you do this, because it's easier to turn something that has number of stocks 3 in it than it is to turn retail internet that has 58 stocks in it. But if you start going through this and going, well, wait a minute, I have 58 stocks in here, and right now I'm at a 46. 3 months ago, I was at a 116. I should probably pay attention to this, right? And you'll start finding sectors that you never even really thought about, like retail home furnishing. You'll find 18 names in here. And then you'll go, well, 6 months ago, it was 196 out of 197. There's only 197. And then you go, okay, well, 3 months later, you're moving up the list. And then you go, whoa, what happened in here? And then you maybe want to drill into those names and see if there's an opportunity. So if you see something or you want me to go over something, please mention it. But that's one way that you could drill into shop and go and find Etsy, go and find the other names. Okay, the other one that we traded in the newsletter for those that are following along is Melly, right? So we've done exceptionally well with Melly, exceptionally well. And in this market environment, it's not even cracking. I'd be more interested in shop here. Now, Nordstrom's, and this gentleman taking a position today, Ryan Cohen. So I don't really care who he is or why he took a position, but he's right. They need to do something about this board. This is a name that I have traded for years, and it is the easiest name in the world to trade. I'm going to show you why. You see all these E's right here? So you have one family that controls this entire company's board. And what they do is they have bad quarters like this, right? They'll just flush everything out like a kitchen sink quarter. Then they'll buy the stock up, right? And then they'll sell into it after their window opens up again. Okay. Then it dumps again, and it's wash, rinse, repeat. They're doing it over and over and over again. They trash it, buy stock, and go from there. It's consistent. That's why these gaps are they're so obvious what's on here, right? It's always on earnings, and you always move 10 or 15% depending upon what their position is. Think about back here, right? You throw a kitchen sink quarter in, you spend 2 to 3 months accumulating stock. You have a great quarter, sells out, you sell into it, and then guess what? It's time to have a bad quarter, right? So it's not rocket science. So I think it's good that he's in here now. How would I trade this? Well, the very first thing I would do is I would go here and I'd watch that 27.18. And I probably wouldn't touch it until at least I got over the opening price. I'd want to make sure that I got over the opening price before I got involved in it. But what this is doing is it's spurring activity in the other names. Let me show you this. Look at Macy's, right? You spiked up today. Look at Dillard's. Now, that's not the close you want. How many names are hitting all-time highs right now? Very, very few. Very, very few stocks. It's a weekly chart of Dillard's. Look at this breakout. It's crazy. So I really like the JWN. I really do like the Nordstrom trade. I do think he's going to do something there. What that's going to be, I don't know, but it's definitely something that would be on my radar. I would not rule that out. Chipotle is a really interesting one. Here we are in the weekly, and you can see how you have that 55 starting to curl up, and you're starting to see things pick up a little bit. We're going to get to that in a minute here about the indexes, but don't sleep on names like this because they're too expensive. You can always do it through calls. You can take smaller positions, but you have some things going on here that are pretty significant. The last pullback was a higher, right? You can see that right here, okay? So you have your undercut right here, which gives you that double bottom, and then you flip. And then once you flipped, that's it. Now you're going straight across here, and you really want to get above that level. You're getting above this, you're getting above that DTL. But on a much shorter time frame, this is the weekly, we can see the daily double bottom. We can see the doji setting the tone. And then after we're setting the tone, look at this and look at how it's done. Now we've got a golden cross. Now we're breaking DTLs. Now we have a confirmed double bottom because we're above here. You have to get above the previous high in order to confirm that double bottom. And we've done it. I wouldn't sleep on this. Now you're going into earnings. I have no idea how the burrito business is. Not a clue. I really don't. I haven't spent a lot of time looking at it, but I would say this. I would not rule this out if you start looking at what's going on here, okay? Doesn't mean that we're going to go up. This one, we went down even though they beat. Well, they're saying that this was a miss in red, but they're saying that the estimate was good. The revenues missed. But if you drill into these, okay, yep, you missed on revs. So revs seem to be the problem, but the earnings must be cutting costs. Anyway, you can see some of these times you explode. So don't rule it out. You're going to have to be really careful because you're coming out with earnings on Tuesday. If you can't get up and in enough, then it's going to be something that maybe you just wait till after Tuesday. Now, natural gas, we should talk about this. You can see the white circles here. We're going to get to that in a minute. See this volume? Look at the volume right here. That is substantial. We're going to drill into the chart in a moment. I just want to point this out. You've not had selling like that. To me, that is a sign of exhaustion and something to pay attention to. Now, I did get another sign of exhaustion today. So we're just going to focus on these bars for a moment. See this wick? See how you did not come down and how small that bar is? See how these three bars are getting smaller, right? Long, medium, short. They're getting smaller and smaller. That means the selling's drying up. And that's what I'm saying. When you start looking at spikes in the volume, the way that we had here, essentially you're exhausted. This is the weekly on UNG, and you could also trade Boyle with this if you wanted to. And I just want to point out the obvious. This is your weekly volume. You've never had anything like this. Look how far back we're going. Never. Unless they're going to start giving away natural gas, I'm sure people want it. And this has got to be setting up to find some kind of floor. When that is, I don't know. I just want to point out something. If I look at DeMark indicators, and what they do is they show signs of exhaustion, either buying exhaustion, which they'll give a little sell signal. I'm not going to walk through the entire system, but this, what you're looking at are the full rules. But you see this little B for buy. See that little B right there for buy setup? B. Okay, so they're giving you spots. It does not mean that it's going to work. This time it was roughly what? Like $10, and then it went up to 16. I mean, it's not the worst trade in the world. And this one obviously worked. So these are weekly charts. So you're not talking about a day, but I would really pay attention to this. Now, to get super technical, what really has to happen after you have something like this, you really need to get above the 6 and a 7. I'll tell you that much about the system. So you would really need to get above that 1165 in order for this to actually perfect, is what it's called. And it just has not done that yet. So be aware that you're down here and be aware that this exhaustion is setting in. Now, in the S&P, I just want to point out some really obvious things here, okay? So you're seeing a left shoulder here, and we could make that a little prettier. Then you have a right shoulder, the left shoulder here, you have a head, and then you have the right shoulder, and then here's your neckline going across. And you can see how tight this is getting and how you're starting to flip going right into here. You want to pay attention to that. Look what you're above. You're above your 55-week moving average. When was the last time you were here? It's been since April. If we go and take a look at the anchored V, you flipped it. You flipped it once before, and then we rolled back over. Do we need to be cautious? Absolutely. Could we roll back down? Absolutely we could. And there's some signs of that. Now you can see right in here, this is the RSI, this is the daily chart. You can see your lines right here. You can see this golden cross. That does not mean that you're never going down again. It just means that you're getting bullish. One of the exercises I put out there for traders this week was to go spend the weekend and go through 40 years of back testing and tell me every time we came out of a bear market, how many times we had a golden cross and then retested the low. I'm going to save you a lot of time. It is 0. Okay. It is 0 times we come out of a bear market from a golden cross and take out the low. Any event-driven specificity could obviously make that happen. But the probability of this taking out the low now is significantly reduced. That doesn't mean you can't come back. And I just want to point out the RSI, and this is where you're sitting on the RSI. You're sitting right in here. And that's something that we really need to pay attention to because that gives us more volatility, which is great to trade. We have to understand where we are in the cycle. We're not down here anymore. In the beginning of January, where it was very easy once we flipped that 55 to see how we were going to act, right? Now we're near the upper end of that. We need to work some of that off. This green arrow is a breath thrust. It was designed by a gentleman by the name of Martin Zweig. A couple people have played with it, done some things to it and tried to make it their own, but sticking with the original kind of makes sense to me. And the reason I say that is you always want to figure out the person that perfected something, right? And then maybe someone else figured out how to utilize it for their services, but that might not be best for you. So I always go with the original and then play around with it from there. Now, that green arrow signifies that advances are significantly greater than declines. And I use a 2-to-1 ratio, and that has to happen over a period of 10. In this case, it would be 10 days. Now, if you go through the chart to get that buy signal, just so you understand how rare it is to get that buy signal, we got it in May of 2020, 2018, 2019, July 2016, and then again after the great financial crisis in 2009. Then as we worked our way back up, some subsequent buy signals after that. The reason I'm showing you this is don't take this lightly. Are we overbought? Yes. Did we get a little frothy the other day? Did some of the cheap seats go up? And are they going to come back down? Yes, that's a possibility. But don't rule out and don't discount what's going on here. To understand why home builders are going to take out all-time highs on the index, watch this 4-minute clip at the end.